The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your confidence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started. Hey traders, Stacey Burke from Stacey Burke Trading. Today we're going to be talking about one of the most important signal days that we utilize, and that is the inside day. Inside day is just a day where its high and low are inside of the previous day's trading range. Now I utilize this a lot, and as we've talked about in the playbook, we have our trigger day, our signal days. First, the inside day, page 69, but we have day 3 longs, day 3 shorts, first red day, first green day. But the inside day is one of the most powerful signals, and depending on where it shows up in the weekly template, can give us an indication for parabolic opportunities for false break reversals or explosive trend trades. Now, the most important thing to understand is that this is just a signal day. How does price set up on the day? Now, we just talked about false break reversals and we talked about trend trades. We're going to take a look at a basket of instruments from this week to, number one, identify how many inside day signal days there were and how those markets set up in the sessions for traders and what opportunities presented. This can signify two types of opportunities. One that can become a trap, and sometimes that can occur over 3 days. We'll look at an example of that, where the inside day is a signal day where volume gets trapped above that signal day or below that signal day for 3 days, which alerts another one of our signals, 3 days of breakout traders that we just talked about. But it can also represent a coiled market pending for an explosive move. Now, these traps typically will involve other time frame traders, as will the coils for explosive moves. They're driven by other time frame traders. So these longer time frames will often use the inside day for a reversal trade signal. They'll trap other time frame traders on the wrong side of the inside bar, or they'll be building up inside orders for an explosive range expansion type of opportunity. I repeat the phrase, what setup are you hunting for? And often traders will say, well, how did you know it was going to do that? Or how did you know it was going to do this? And I ask the question, well, what setup are you hunting for? Because if you're not looking for the inside day, how would you ever find it? So each day, skimming through your basket of instruments, major currency pairs, commodities, energies, and indexes, it would become easy to spot, even in a basket of 5 instruments, whether or not you're getting a signal day and whether it's front side or back side in the week. We'll review this one more time. The weekly template. Friday is the closing range of the week, day 3 on the closing range of the week. The new week starts. We have a new opening range, day 1, the opening range, Monday. Tuesday typically expands the range, day 2 on the front side of the week. Wednesday is the midpoint range of the week, day 3, and resets to day 1 into the back side of the week. Day 1, day 2 on the back side of the week, we can see range reversals, but also if it's a trending week, we can see a continuous range expansion, expanding the range again on the back side, and the closing range on Friday, day 3 again. And so basic templates will often involve pump and dump or dump and pump type weekly templates, but we can see the inside day offer us significant opportunities when they present, whether it's front side or back side in the weekly template. The reason we're looking at Friday is because hindsight pays, and if we're looking for an opportunity on Monday based on the inside day signal, Friday or Thursday can give us an indication of a potential opportunity on Monday. Now, we went over this pair, this trade in a previous video. This is a 3-day setup. We have the high of the week is Thursday. And this is an example of where other time frames are driving this move. What are other time frames? Well, we've got hourly, 4-hour, daily, a close down low inside of the previous week's range. But also, as this market breaks lower, it triggers new breakout traders into the market. We have shorter time frame traders chasing what they perceive to be the trend. And once this market reverses, it will not come back. If it comes back, it allows traders that are now in loss to get out of a losing trade. The name of the game is to shift the money from the many to the few. This market from the previous week forms a low of the week and a high of the week. That forms a box, classical charting principles, a rectangle. Projecting 100% expansions of this range allows us to form a thesis in how far this market could potentially go to. Now, obviously, if traders are in this move, they already have a plan of where they're going to be taking profits or managing their profits as this trade approaches that upper second boundary. But that previous week forms one large consolidation, and when we break out on Monday from the inside day signal, this market has now gone on a range expansion on Monday, day one. On Monday's close, we had West Texas oil closing as an inside day, a signal day. Now, if we get an inside day at the end of a week or the beginning of a new week, again, we're looking potentially at a range expansion opportunities as we head into a new week. Weekly levels are critical because it allows us to form a thesis if the market is potentially going on a reversal back against the previous week's range, or if we are going to continue the range and have a range expansion in line with the existing trend. We have a market that closed the week in breakout. It broke out from the previous week's low. If we go back and we draw our low of week level, the market broke out on Monday, continued to trade lower lows on Thursday for the pump and dump template, closing in breakout again at the end of the week. It's repeating the basic model for trade entry criteria on page 29 in the playbook, as well as the inside day, page 69, and the day zero template, peak formation high, peak formation low, consolidation. The outside day is a version of the day zero template. We project the high of day level across because that was formed by one of the extremes, and the low of day level across, and the inside day forms our coil, our consolidation coil heading into the new day. Paul Tudor Jones, always think of your entry point as last night's close, and you'll also notice that the market has formed a consolidation heading into the new day in the US window. And our basic model for trade entry criteria in the third hour of the London window gives traders our parabolic range expansion trade on West Texas oil. Tuesday, day 2, typically expands the range. Our signal day was the inside day. The most important part of this whole process is going through your basket, spending 10 minutes at the close of each day to identify which instruments are offering you a potential signal day. Now, something important to understand about Tuesday on West Texas is that once breakout traders are triggered into the market, you'll notice that the market is not reversed. This is not a false break reversal setup. We're on Tuesday, day 2. The market breaks out and stays broken out as we head into our U.S. session. Our U.S. session just after the 9:30 New York Open continues to expand the range. The low-hanging fruit trend continuation trade for New York session traders. Page 96 in the playbook. We have a market that's broken out from the previous low of week level. We've traded lower. They've put a peak formation low on Friday, inside day on Monday, expanding the range on day 2 on the front side of a new week, trading back inside of the previous week's trading range. We're trading back up into other time frame sellers. We have an inside day signal Wednesday, the midpoint range of the week. So again, depending on where these inside days show up, they can have critical significance to the type of trade setup opportunity that traders can hunt out. We get a market pumping up, breaking out of the high of the week, trading up into other time frame sellers for the collapse and reversal, the coil sideways for the parabolic low-hanging fruit continuation trade in the New York session. But understand on the front side, we had the range expansion, the breakout of the inside day. And on the midpoint range of the week, think about what's happening now. We've triggered other time frame traders into the market, not only at the break of the inside day. So we've got buyers buying in line with what they perceive to be a trending market, triggering on hourly, 4-hour, daily, triggering other time frame traders up high before collapsing, trapping volume up high, coiling sideways on top of closing price, and you'll notice we're underneath of Wednesday's closing price level. We talk about the infamous 10 a.m. club, the third hour club. We have a market that has triggered other time frame traders above the high of day level. We now potentially have stops on longer time frame traders down low in the middle somewhere or below the low of day level. That is our target once this market coils sideways into the third hour on top of closing price for the parabolic reversal trade in line with the failed breakout of the inside day. Remember, front side, day 2 typically expands the range. Day 2 on the backside can reverse the range. Thursday, we had the NASDAQ close as an inside day. We had gold close as an inside day, and we had the Aussie dollar close as an inside day. Now, there are obviously maybe other instruments that showed inside days, whether they be major pairs or cross-rate pairs. But the purpose of simplicity is to isolate one or two that have well-engineered templates on the day and understand what a best playbook trade candidate looks like and how it should behave into the timing window. So you can bring up 5 instruments, but 3 of them may be a mess. We're looking for the best ones, but sticking to a basket of major pairs, commodities, indexes, and metals, we can isolate at least 1 or 2 great opportunities. And as we can see here, there was 6 this week just in looking at this basic basket. There were other ones, but 6. Now, only 1 or 2 of these is enough to significantly compound your account when you understand the setups, when you have the composure, patience, and skill set to be able to wait for the opportunity to present, to also be able to execute it in live time, and then understand that when the trade is done, you walk away and you come back and rinse and repeat and look for the same opportunity at the close of the day for the next day, whatever session you're trading in. We're looking at the NASDAQ 100. We had an inside day signal day on Thursday. We have our high of the previous week, which was also the high of the current month for October, and that was made on the previous Monday. Our low of the week was made on Wednesday. And so when the new week started on Monday, we were inside of the previous week's range. Now, I just removed the high-low daily indicator to demonstrate to traders how often when they're inside, they're still getting caught in the smoke and mirrors of the price action inside, when in reality, you're still trading inside of a previous week's trading range. When traders talk about range expansions, when we're still inside of a previous week's range, we're not in a range expansion. We're inside of a trading range. When a market breaks out, it's expanded the range on the downside. This is not a day 0 template. This is a large trading range from the previous week. The market breaks out on the Wednesday. For simplicity, pointing out peak formation high, peak formation low, the market traded back up into that peak formation high. We had an inside day on Friday, and this is a great example where traders can recognize now pumping up into the high, breaking down day 1, day 2, day 3, Wednesday, collapsing prior to our U.S. session window. A parabolic collapse through the low of the previous week, which reversed prior to the end of the day and closed back inside of the previous week's range. Now, we've closed in breakout from the previous few days, but we're inside of the previous week's range. Now, when the market closes as the inside day, we have a market that's broken out and closed in breakout of the current week. And so understand, when breakout traders are in the market, we have Tuesday's high and low of the day as our levels for breakout traders in the markets. So remember, the market closed in breakout. We've broken outside of Tuesday's low of day level and closed outside of the range. We made higher highs on Tuesday, so anybody who traded the breakout of Monday's high of day has now already been cleaned out. The market closes in breakout, and then on Thursday closes as an inside day, and we are back inside of Tuesday's low of day level. So now our thesis can become day 1, day 2, day 3 on the backside as a potential trend trade from our peak formation low on Wednesday heading into our inside day coil for a potential explosive move back through the high of not only the current week, but the month itself. Before we get there, let's talk about failed breakouts, because a lot of people are calling every breakout pullback a failed breakout. Now, this market is not a failed breakout until on Friday we break Thursday's high of day level. When we break Thursday's high of day level, we have now triggered the inside day traders into the market on longer time frames. Remember also, we have breakout traders who have entered the market on the break of Tuesday's low of day, whether they're on 4 hour, 1 hour, 15 minutes, daily, doesn't matter. Longer time frames will have their stops potentially at that high of week level. So if we project that level across now, again, we understand that breakout traders are underwater as we head into our U.S. session window. We're sitting on top of the inside day. This is a 1 hour chart, 7 a.m. candle. When the U.S. session opens, our close of our 7 a.m. candle, it's 8 a.m. when this candle closes, we are already on top of the inside day level, but we are also in a parabolic channel. Day 3, we've talked about the parabolic channel, the higher high, the higher low, the consolidated volume, potentially preparing for an explosive move. This is a 1 hour chart. We'll bring this over, but we'll also put our universal basic model for trade entry criteria on this chart to emphasize to traders, when this candle closes, a 1 hour candle closes, this opportunity is being driven by other time frame traders. Bigger players, bigger money, and this market explodes through the high of the month, high of the week first, and then the high of the month into the New York Open. And a trade like this, we already have our thesis in place, but if we were going to scale into this position, also successive minute closes into the 5-minute close. This market exploded quickly and fast, giving traders an easy opportunity on day 3 based on the inside day signal. Keeping it very simple, having a basic process, just identifying 1 or 2 candidates, front side, back side, 1 or 2 of these setups this week. Based on this criteria, it could have significantly compounded traders' accounts. And again, zero stress, zero emotion, zero thinking, and virtually zero trade management once you're in that move. They are ACB opportunities because they're not coming back. Simple, repeatable, and scalable. If you don't have a daily process for hunting out the best playbook trade setups, you will take trades anywhere. Repeating a comment from a trader, I'd like to know beforehand when these are going to set up, and I asked, what setup are you hunting? And they had no idea what they were looking for. Inside day is a very simple signal day. So simple, you could follow 10 instruments and probably find 3 or 4 trades each week, 2 to 3 for sure, of parabolic best playbook trade setups, front side, back side, keeping it simple, scalable, and repeatable. Zero stress, zero emotion, and zero thinking. This is one signal day out of the playbook. So I encourage traders to step back and be patient and understand the power of when other time frame traders are either trapped or when they enter into the market to be driving a move. Little bars back and forth and zigzags and everything else are not scalable. 3-day setups, trigger days, when other time frame traders are in the markets, that's when we see large scalable opportunities present. Sit on your hands and wait in between. Don't do anything to self-sabotage your good results, and make trading a pursuit of pleasure. Keep it simple, traders. May the markets go with you.